Welcome back to another ETF review. Today I'm going to be talking about the BMO US High Dividend Cover Call ETF, ticker symbol ZWH on the TSX. If you are new here, on this channel I am reviewing various ETFs to give beginner investors a better idea of how to invest for the long term. If you like these reviews and want to see more, like and subscribe and comment your suggestion of which ETF I should review next. So today I'll be reviewing the BMO US High Dividend Cover Call ETF, ZWH. This ETF has been designed to provide exposure to a dividend-focused portfolio while earning call option premiums. The underlying portfolio is yield-weighted and broadly diversified across sectors. The fund also dynamically writes covered call options. The call options are written out of the money and selected based on annualizing the option's implied volatility. For investors that don't know what options are, they give the right to an investor to buy and sell stock at a specific price through the buying and selling of contracts. These contract prices are determined by their strike price or their agreed upon stock price and its expiry date. So for the example of ZWH, they must hold stock for the contracts they sell. It is important to note that these premiums received by selling the contracts are most profitable when the stock price remains the same or even declines. In a second, we will see what types of companies ZWH holds, so they are able to sell these contracts. Some of the largest holdings ZWH has are companies such as Pfizer, Apple, Procter & Gamble, Home Depot, Coca-Cola, and Microsoft. These companies are very solid and they also pay dividends. Keep in mind that ZWH will receive the option premiums for these companies as well as the dividends these companies distribute. This ETF is heavy in the information technology sector as well as the financials and healthcare areas. This type of strategy seems to be very profitable for this type of fund as long as the general market continues on a steady and increasing trajectory. If we look at some of the fund details, we see that this fund has a fairly high annual management fee of 0.65%. Compare this to some of the other ETFs I've reviewed in the past, such as VDY, with about a 0.35% management fee, and VGROW with a 0.22%. This fund has a monthly distribution frequency and allows an investor to receive steady cash flow every month. We can see that this fund has 38 securities and a PE of about 20.5, which corresponds to an ETF that is value focused. This fund also has a distribution yield of nearly 6%, and this allows the investor to receive about 0.5% of their total investment every month. This fund has been fairly consistent over the past few years, following the American markets while also giving a healthy distribution. This fund's performance is impressive. Since its inception, it's yielded about 11.75%. Even if this fund doesn't perform this well in the future, this ETF has a place in every portfolio as it produces cash flow that an investor can reinvest every month. One drawdown of this fund is the slow growth of its distribution. I would not anticipate any increased distribution growth in the near future as option contracts are limited to how much cash they can produce. The BMO US High Dividend Cover Call ETF is great to increase cash flow for reinvestment or as a fixed income strategy for the older investor.